Good evening. Hope everybody enjoyed their week. Coming out with another video on ticker ALAR, Alurium Technologies. Shout out to Andy. All right, shout out to Andy. We were talking about this company during my test live stream earlier today. I deleted the actual live stream itself after it was done. It was actually more of a test of familiarization. I will start doing a weekly live stream out on different topics. So I do have a live stream scheduled for July 20th at 3 p.m. Mountain Time. Okay. So if you go to my main page and you go to the live and you go to the actual live tab, it should be scheduled there for your situational awareness. So you can click the notify to remind you. Put it on your calendar, people. We're going to do a live stream. It's going to be focused on Planet. So good stuff to come there. All right. But yeah, shout out Andy. Hey, good conversation. I'm making this video for you, buddy. I'm sorry we got cut off during that live stream. Had some technical difficulties, if you will. But anyway, moving forward, let's get into it. All right. So, Alurium, this stock has had negative price action since the time I did stock analysis. And there have been, I'll even pull it up. There have been comments on it. ALAR stock analysis. Maybe, hopefully, we'll see if my thing picks it up. Yep, there I am. And there have been people saying, "Yep, this thing's overvalued, this and that." And you know what? I have to agree. All right, this thing is pushing it. We'll go back. Let's look at some of the technicals. Look at this 6-month chart. This thing is ran. Okay, year to date, this thing is up 250%, even after the pullback down to these levels. Why do I think? Why do I think this thing's going down? All right, and the whole market is generally on a uptrend right now, as far as a lot of these small caps. Okay, so I have a couple theories on why this is going down. And I've reviewed I've listened to their earnings call. I did a little more in-depth research, and this is what I'm coming up with. All right, there's some warrants out there that these warrants are yielding annualized 8% interest. These are not cheap warrants. All right, these are expensive interest-bearing convertibles. All right, convertible derivatives. And according to Alurium's, if you followed my video out in the past, I made a past video on this. Their auditing and accounting standards are different. So their auditing standards are not under the PCAOB. Okay, so their actual, their reporting standards are different too. They do not go off conventional GAAP reporting accounting. All right, they go off of IFRS, which is the international accounting portion. All right, so why does this matter? Why does this matter? Well, I'll tell you why it matters. Because if you want access to U.S. capital, there needs to be a line drawn in the sand for rules as far as uniformity, etc. These financial institutions do not have to give you respect. There's a bunch of companies that following the GAAP reporting standards, they still do not get a lot of respect. And I'll tell you why. And this is something that I've something that I picked up during the actual earnings call, is these analysts are having a tough time modeling key performance indicators for the actual company, and they're having a hard time understanding the product. Okay, They have customer breakdown here according to their earnings, but they do not have the product breakdown. It's more of kind of a, excuse me, more of like a black box as far as how they're reporting this on quarterly earnings. So, from what I understand, this company is mainly a one-trick pony, and they have this one-trick pony, meaning that the main product is NetNut. All right, and this is an IP proxy service, but there's a cross-sell aspect into another product called the Scraper, all right, which uses AI for data analytics collecting. All right, so you get this IP proxy. You're getting a, how do you say, you're buying this product, but it's kind of incomplete without this Scraper, which does the data analytics. So it's kind of a cross-sell function. You buy the Scraper, but in order to access all that good stuff and all that data, you may need to shift your IP via an IP proxy, and or you get this IP proxy, but you kind of need the Scraper to realize which IP to go. It's a cross sell function of products. Um, I think that's okay. It's a good strategy, if you will, but this is the one thing from a business model perspective that I would worry about if I was investing in this company. It's a funny thing about technology. You can go from hero to zero real quick when your actual product becomes a commoditized service. And what I mean by that is all these different tech companies are going to be propping up the next NetNut. And they may call it something different, but they do the same thing. Next IP, maybe there's 30 IP proxy companies that show up on the net, and next thing you know, you're competing against all of them. I think they have first movers advantage, though. Um, I would have to look more into, if I was investing in this company, and if there are investors out there, maybe the hot tip to look for actual intellectual property, via patents and their defensive moat with the intellectual property being used in this tech stack, because what they have is a tech stack. Um, and keep in mind, when it comes to these actual patents, all right, it matters where the patents are filed. So if they just have the patents filed in Israel, and you have a bunch of different US companies with a similar tech stack that do similar things, these guys are not going to be able to enforce their patent because they're overseas. All right. Patents are enforced by government entities, all right, via lawsuits and so forth. All right. So some to consider. I think, some to look at. I'm not saying that I'm projecting these people to be disrupted, or this company to be disrupted, but it's just something to take note of. All right. So analysts are having trouble. I think analysts are having trouble pricing the business model and the product. Um, as far as KPIs, like key performance indicators, the management has said that they are going to look into it and present some sort of key performance indicator to help analysts model this thing. Some talk about how they're managing the cash. They have increased cash on the balance sheet. Let's go to financials. We'll go to the balance sheet. The balance sheet is increased by about 5 million. Um, and I'm sorry, the company's management is pretty much voiced they're going to be stacking cash. Um, and of this cash, of the balance sheet, that cash is managing the warrants. Okay, so if I go down to the balance sheet, there's a chart on what is what. Okay, here we go. So as you can see, 8% of the balance sheet is managed with warrants. 8% of the balance sheet is managed towards, servicing the warrants. And they're going off some sort of their tax bracket. They're able to get a 12% tax bracket because they're investing so much R&D. And according to whatever Israeli law, tax subsidies, their version of the IRS code, if you will, they get to benefit off a 12% off a 12% income tax rate for their company because they're investing so much into research and development. All right. So that kind of makes me feel good because they're investing for research and development and they're getting a beneficial tax rate off of that. All right. So how does this translate when I'm talking tax rates, amortization, depreciation, tax stuff? How does that translate? All right. We have these different ratio metrics. I look at EBITDA, all right, earnings before interest and tax, depreciation, amortization, okay. And with these tech SaaS multiples, with these tech SaaS business models, I look for the rule of 40 and I use the EBITDA margin. Other investors will use the EBIT or they might use they'll use the gross profit margin. I use the EBITDA margin when it comes to this stuff. All right. Because most of the stuff is taxes and stuff. They have low overhead on a lot of these tech SaaS companies. So if your revenue growth is 36.9%, all right, projected for this year, the rule of 40 states that your EBITDA margin needs to be at least 3.10%. All right, 4% on a rounding error. All right, we go back to profitability. It's 22.57. So they're well above the rule of 40. And this pretty much states the actual scalable growth of profitability within the business model is sound. Okay, so that's good. Now, how does the EBITDA translate? How do I look at a company that is, got these tax subsidies and amortization that are benefiting off of this? Well, I tell you what, if in the event that is so, all right, I look at the net income margin and I look at the EBITDA margin and the gap in between, all right, they should naturally fill the gap. So your EBITDA margin will go down, but your net income margin should go up. All right. That's typically how I see it. I see that it's as the potential for better net income margin expansion. How much of a gap do I got? Oh, and how much of a runway for their total addressable market and so forth. And I'll actually look at that and consider that in my price target ranges. All right. Just something to just food for thought. Hopefully you get something out of that as far as like a mental, intellectual stimulation. All right. When it comes to valuation. Now, the problem with ALAR is their accounting audits. If you want this to command, if you want this thing to command a price to sales, like that tech SaaS multiple price to sales of 20 to 25 price to sales, you're not going to be able to get that with IFRS accounting in a country that's in war and they are not PCAOB audited. They're not audited by a firm that falls under the PCAOB. So you're not going to get American capital or a lot of American capital to just jolt this valuation. Okay, that's one thing that I see with Alarum. And I think the management will eventually, catch on. But yeah, for me, I can't get over the accounting of it. I need to understand it from a gap reconciliation basis. But that's just what I got. I'm not telling anybody to buy or sell. That's just what I think about this company. I think it's overvalued because of the risk that's put in due to the accounting. All right. I mean, I just can't get over it. All right. So anyway, that's what I got. I hope you all got value out of this. Be sure to like and subscribe. Check out the Looney Syndicate on my Patreon. Consider my Patreon. There's so much value on there. You get a community of like-minded investors. You get access to the Hidden Gem collection. You get more exclusive access to contact me on a daily basis. And then I have all different types of spreadsheet tool products and instructional base on how to use them and so forth. All right. So with that being said, hit that subscribe button and I'll see you until next time.